Thank you very much, Sean. Welcome, everyone. Happy Saturday. Uh, this is end of July, and believe it or not, 7 months are gone. So uh, it was exciting, boring week, actually, I should say. A lot of things happened within the week, but overall, the week, nothing happened. And yet, we had the FOMC, which was a non-event. And then we had big tech earnings, which they they did have great numbers, but then the expectations and then the forecasts did not meet the again the expectations. So as always, we will talk about a little bit about the economy, the upcoming week, what to expect. Again, it's the beginning of the August, and then we'll discuss a little bit about again. I keep talking about it's all about the yields, about the interest rates. We've got the inflation, and it's all about again the fixed income and how the FOMC, and this is really it's the market, right? So it's the FOMC, what they're doing regarding these. We'll evaluate the markets. I got quite a few short lessons of the week, which I hope they're again helpful. We talk about the trade of the week, which mainly will be talk about a couple of ETFs and stock of the week. And then we go look at candidates for this coming week as well as the upcoming earnings. Still, there's some good earnings coming due next week. So with that in mind, let's start with economy. As you can see, again, call it under the hood economy. We want to see what is happening with the staffing, with the box office receipts, with the retail car traffic, the jobless claims, the continuous jobless claims. As you can see, we still double where we were 2 years ago. So we are definitely not out of the woods from that point of view. On the other hand, there's still a lot of employment coming due. I know I keep getting every week. I'm getting these emails and they're wanting, and I know there's a lot of places asking for employees. So well, let's see what happens after. Again, this September will be end of a lot of um, unemployment, extra pay. So one of the interesting things I want to highlight is the steel production and the hotel occupancy. These are the highest we've had since the recovery started. So, and that tells us again there is a movement. We are not too far from hotel occupancy where we were in 2019, and the momentum is upward, as well as again the steel production. We will talk about again the commodities, right? So that's what's happening with that, and then the flights are continuing, and the movie theaters gradually opening. I was just checking some of the movies. There are not a lot of movies out there, so there's just gradually coming out. And I know my son and his friends, they were watching, all these brand new movies they can watch on either HBO or Disney Plus. They can sit at home and watch with their friends, so which is interesting. As far as upcoming week, we got I think again it's the first Friday of the week. We have the non-farm payroll, and this week is no exception. It's coming up on Friday, August 6th at 5:30. You can see the average hourly earnings, non-farm payroll, and unemployment rate, and these are the expectations, and basically can see what they're looking for. So we shall see how the market is going to react, and basically it's not the reaction to the job numbers, it's the reaction of what is the reaction of the FOMC regarding these, which is basically last week, just going back to that, as it was expected, Chairman Powell didn't really say anything. And even Jackson Hole meeting, which is coming in September, doesn't seem it's going to add anything. They're not going to be tapering. He was very adamant about it. So nothing seems like the markets have resigned to know that they're not going to do anything at least till December. So that's a thought, and that's what the markets are looking at. One of the interesting things is I wanted to look at the real rate of rates, which is actually your yields, your interest rates minus the inflation numbers. And um, this is from Bloomberg. I want to go back, and you can see that the black line is where we were in 2019. granted, we were in the negative yields as almost everywhere around the world, except some emerging countries. They have been in the negative yields. Um, and only the 30-year bonds on December 31st was tiny bit above zero. But you turn the clock and we go to June 10th, for instance, and it's even more. This is the last number I could find, but we could, there's obviously there's more numbers coming up. Just this graph was really interesting to see. Actually, under 2 years, we are at like -5 real rate, and the almost -3% at 30-year. And that's why, again, whether this is inflation is transitory, and that's the fight with all the governors, and they're all, so far, it seems like they're pretty united in their assessment. So I thought this was interesting, and we shall see what happens. The next one I want to look at, this is from Bank of America, and the spread between corresponding yields, treasury yields, and the worst, the lowest of lows, the junk bonds. And you can see how we have dropped. So, but 10, 11%, it has dropped to 4 to 6%. So what that means is even the worst companies, they are borrowing at such attractive rate with such a low, again, spread. So this is a word for concern, and I will discuss it more in our lesson of the week. But the idea is this, what happens? And that's what this tapering, is such a big question. The minute some of these zombie companies and, the companies that they were almost going out of business all of a sudden with such attractive low yields, they kind of got second life. And if the interest rates do go up, that could be death nail. So those are the things, again, I'm sure the FOMC, the central banks are watching. So, but this was, you can see how low we have been. As far as the markets, basically, let's go with the sentiment. And one Friday, and then Monday we had a day, and you can see how it affected Wednesday. We got, again, more bullishness, again, because the big techs were coming and then the negativity has come down. So the average is 30.5. Last week we were at average. This week, all of a sudden, the bullishness has come back. And it has moved really from the bearishness has lowered, the bullishness has been higher, so it came more bearish. People went to more bullish or a little bit more neutral. So that's as far as American sentiment. But this is the fear and greed index hasn't moved much. And again, this looks at the internal numbers from the breadth to put call ratio to the strength of the momentum. So you still can see we're at fear, while the Citigroup is at euphoria still. So again, when you look at overall the week, it looks like, again, another holiday week, right? So the Dow Jones was down barely 0.36%, S&P was down 0.37%, and NASDAQ was down 1.11%. Basically, there's layoff of some tech companies, and really, when you look at, again, you see that they're not big movers. Russell was up under 1%. The utilities were flat, 0.32%. The transportation, we'll discuss it again. They're telling us something. I think between the transportation and the bonds, they are telling us that the growth is slowing down. And I think that's what that's what really the central banks and the Fed is watching. And as you can see, that reflation economy and the stocks in that, from leisure, we look at, like, let's say, the cruise liners, and they're really slowing down in that sense. So we are watching that, and basically you can see really there was not much movement in the markets. The advanced decline line, on the other hand, it seems like, it's interesting. The markets were down, but the breadth was positive. As far as the dollar again after the FOMC meeting, that it retraced, so we are a little down compared to last week, and consequently, what happened? I just jumped to gold. Gold was up a little bit, and basically, why was that? Was basically because the dollar was down a little, and the bonds were flat to up a little bit, so which bodes well, both of them for gold, but very small amount. So now we will look at the chart of the gold, and we shall see what happened with gold, and uh, why there was some profit taking on Friday, for instance. Now, as far as the crude oil, it was up, and consequently, it kind of helped the inflation numbers to go up a little bit. So let's look at, I like these moving averages because, again, whether you're a technician or not, we want to respect that. And basically, you can see the 8-day and 21-day and 50-day, they have been big support lines. So, for instance, last week, as you can see, that 8-day exponential moving average pretty much held, regardless of what happened with the FOMC, with the big earnings. We had a bounce on Tuesday, we had a bounce on Wednesday, we had a bounce on Thursday, and we had a bounce on Friday. So basically, that's why it's important to respect these and use it as a guideline. Now, one of the things is I'm still looking at the distribution and accumulation. You can see the up days are on a lower volume and down days are distributions are higher. But again, it's summertime, and you don't really need to have a lot of volume to move the market. So basically, it just tells us there's some profit taking on the when the markets are, or when the markets go down, there's a fear, but this buy on the dip still works. Every time we hit the 50-day, we hit the 21-day, it's working. So the week that again we had, when we look at the stochastics, we still embedded, so that hasn't changed. We hit that 18-day moving average. We hit the upper Bollinger Band. So, Bollinger Bands are narrowing, and basically nothing yet. We will discuss in our lessons of the week. Again, it's end of the July. We talked about, of all the summer months, July is the strongest. And you shall see that of all the indices, every index was up at least 2%. So I'm talking about the Dow Jones, talking about NASDAQ, and I'm talking about S&P 500. Only the weak one was the Russell, which I believe it was down about 3.7%. So that's the story as far as the month of July goes. Historically, the month of July starts weakness in NASDAQ. So in August and September are the weak months of all the 12 months. Usually those are the 2 months to watch for. So we are, seasonality wise, we are getting to the weak part of the year. So please be aware. Last time I mentioned there's a lot of vacationing going on and all the slowness. So this is not the time to really do a lot of aggressive, as far as adventurous trading. So things can move very rapidly. Again, I've seen it in the past 10 years, especially. So again, so S&P for now, there's no shorting needed. NASDAQ, the same thing. We are sitting right above at the magic 80 number is still embedded, although MACD is giving us a little divergence here. So let's see what happens. Again, after Amazon's numbers on Thursday, the market had a little shaken up. We had the PayPals of the world. So, but as you can see, we still have a nice support at 18-day moving average. As far as the Russell, all right, Russell had a up a week. Basically, we broke above the 18-day moving average, but we hit that 100-day, we got rejected. We're sitting right on 18 days. So right now we have a green and red candle. So momentum is up, getting close to the overbought. Not there yet, but that 100-day is telling us there's some resistance, although MACD has basically started breaking above the zero line. Same thing with the Dow Jones. The 18-day is support. You got a nice, still embedded. As far as the transportation has been my concern, again, since May, you can see we cannot break above the 18-day. We go hit the Bollinger Band, we bounce back, and then that 18-day has been resistance. On top of that, there's a 100-day, and then there's the upper Bollinger Band. So we are in a no man's land right now. There's a neutral zone. So, but I do watch it as a heads up. The same thing on a weekly basis, you can see the Bollinger Bands are narrowing. We have been under the 18-week moving average for 1, 2, 3, 4, 5, 6 weeks in a row. We are in an oversold position, but we don't know if this is going to become embedded. But for now, it's oversold. We are hitting that lower Bollinger Band, but that 18-week is resistance for us. The VIX is also sitting on its 18-day and 100-day, so there's a support. What that means is, again, the VIX is, if it breaks down, obviously it's good for the market. But right now, it was down for the week almost, so it's like a flat. But we are holding that 18-day moving average, so we want to watch that. We are oversold. As far as the VVIX, again, we had a support at 100-day moving average, and continuing that like I had mentioned, again, I'd like to talk about the yields a lot because that's where the markets are really, they're watching. And this is our 10-year yield. We had tried to break above 18-day, nothing, came down, neutral momentum, MACD is neutral. So, it looks like as far as the least resistance is going down. So that means the yield like to go down toward the lower Bollinger Band, which tells us then that means the 10-year note is on the upper movement. And as you can see, we are holding above the 18-day moving average. And you're pretty flat on our momentum. You're not overbought and there's nothing going on. And it translates, you can see nothing major has happened. Even after FOMC, nothing really happened. So the same thing, the 30-year bond, we are sitting right above the 18-day moving average. We are above the 100-day moving average. So it's like a similar, basically the momentum, everything looks very similar. This is something we've been watching for the last few weeks, is the 100-week moving average on the bonds. And we've been trying to crack that resistance. So you can see you're trying to get to the momentum up as far as the stochastics getting embedded, the MACD is up. So it is telling us that there's a good chance that the 30-year bonds are going to keep moving up, which again, that bodes well basically for gold and also the interest rates. And the financials in the same pattern, in the sense they're very flat. The Bollinger Bands are just been very narrow. So we'll see how that's going to work as far as if we got a big movement in the interest rates going down, how the markets are going to react from the financial point of view. The dollar, again, with the interest rates and then what has happened with the stability in the bond market, was down, and then we had hit the Bollinger Band, and here we are. Bounce back on Friday to get away from the Bollinger Band, and then we are in an oversold position as of this moment. The gold had a very nice run on Thursday, hit the Bollinger Band and retraced to its 18-day moving average, momentum up, but it's nothing, really there's not a lot of conviction at this time, the support. So it's the doldrums of summer. But again, historically, summer going to September, October becomes a good buying months for accumulating at least gold. Silver has been weaker, but again on Thursday had a very nice move, and we are just sitting right around that 18-day moving average. Although momentum is moving up, we have a little divergence on stochastic, and MACD is trying to cross. Bitcoin, what a week it had last week, the Amazon news and other things. So we did go above the Bollinger Band. We traced, so we have a doji right now. We're trying to get embedded. So it looks like there's a little strength. So there's a resistance about 42, 43,000. We go up. But you can see again what happened to that volatility. We were low volatility, and then boom, it works itself out. The same thing with Ethereum, kind of similar to basically Bitcoin. Crude oil followed what happened with, again, with the less of concerns about the variant. Now that the UK is opening up, now they're relaxing, for instance, for the airports. Now they don't need the quarantine, so those are good news. Europe, so that's basically it's helping crude oil. Besides, the dollar was a little weaker on Thursday. On the other hand, the XLE, the energy sector, is still weak under 100-day and under 18-day moving average. The copper, again, this is a story that it's, we got a little overbought right now. I still feel that we will have a nice support at 18-day moving average. There is a China story, there's an infrastructure story. So this will be a good time, once we get to that 18-day, and if we hold it and momentum changes, might be a good time to play some options maybe on some copper stocks, so just a food for thought. So as you can see, every time, we just couldn't hold outside this Bollinger Band. So watch for that, because that tells us, that the warnings that, if you have any position, get out of it. Speaking of that, last week I talked about the ETF. One of them was Joe, which we'll look at it. It was a huge momentum in coffee. Again, we've talked about the current patterns in the, with La Nina and El Nino and what's happening, the freeze in Brazil. And what happened, you can see that 1, 2, 3, 4, 5. And this was last week. This is where I talked about coffee. On Monday, we had a really nice move. Coffee moved up nicely, but that was the 5th day outside the Bollinger Band. And after that, you can see the basic came inside. And once we lost our embeddedness, again, the rule is once we lose the embeddedness, gets to overbought, it usually moves from the Bollinger Bands either down or up. The next pivot point, usually the situation is like the 18-day moving average, and that's what happened. So basically, if we would have stayed, it wasn't continued being embedded, then usually the band gets either spreads out so you can stay inside it without going down, or the movements are very small. So this is just a lesson more of that. Expected moves. I like to see the continuity with these, and you can see for S&P there was really non-event. Basically, it's like it just closed a little bit below where we started on Friday, so that was a non-event for S&P. On the other hand, Nasdaq twice it hit the lower edge, and it kept it. So on Tuesday and then on Friday we bounced back. On the other hand, with that, Russell was the stronger of the indices, and it went in on Thursday hit the upper edge of the Bollinger Band. And Dow Jones was flat as well. And the bonds, were positive a little bit, but they stayed right in the middle. And gold, actually, on Thursday, we went outside the expected move, and Friday we came back in. And on silver. Same thing, we hit the upper edge of the Bollinger Band and wasn't a lot of retracement after that. The XLF upper edge of the Bollinger Band, and XLE we went outside and then we got rejected and came from upper side of Bollinger Band. So last week for the S&P, the movement was like 57 or so. This week's about 62, so a little bit of a expansion. So I like to spend like a few minutes. These are going to be, well, one of them might be a little lengthy, but just a short lessons. And the reason I bring these lessons, it, it is something that, again, I'm hoping it's helpful, not just for this minute, but times to come. But also, again, I'm hoping your trading and investing career or season is for a long time. And the history repeats itself. So some of these lessons, the way the time is flying, I mean, it's already August, and it's like 7 months. We were talking about New Year and all the predictions, and here we are. So time flies. So these lessons come a lot faster than you think. So you can review these if you like, and have archives if you want. That's one of my goals, hopefully, have all these archives. So the first lesson was, I just thought it was interesting. We've talked about the FOMC day, and the day before there was studies done. As I mentioned, it has become less and less relevant as far as the idea was that you buy the day before, usually midday or like late in the morning, and sell late in the morning way before the FOMC starts. And that was a 24-hour trade, it's called. And historically, the market has the tendency to go up. With the interference and them being more proactive central banks, with a lot of things, it it, it has lost its lost because loss is lost. So basically, it's not as predictive or profitable as it used to, but still it's relevant. And I thought, just look at it. This is the Tuesday, the picture, right around 10 a.m. 10 to 11. If you would have bought somewhere around time around here and sold it around here before the FOMC started, that would have been a nice. If you do the futures or options, it's about 20 points or 25 points, or that's not a bad thing. So you just put it in your archive. Just remember that. As I mentioned, it doesn't move as much, but most of the time it has done. It has a good win rate. I want to spend a little time on this. As you can see on July 23rd, this was a headline that China's after-school tutoring crackdown goes nuclear. And as you recall, the three big stocks, and um, these are the online education or after-school education, basically in China. And a lot of people thought the first wave would be it, and then maybe that was a good time to start buying these after-school tutoring. And so they were the three main stocks were the TAL, the EDU, the EDU, and GAUTU, GAUTO, or GAOT, GAUT, no, GATU, I believe, GATU, GOTU, yeah, GOTU. So basically, those were the stocks, but they kept going down. So I, based on what I see, and maybe in the Q&A we will discuss it more, what has happened, sometimes when you look at from outside, from society, let's just say Western society, we think, what is this government doing in China? What is happening? And we make some of our decisions are more of a reactionary, and then we think that if in open markets this will have never happened, but we don't understand the actual the whole story, what is behind. And I'm sure some of you are familiar with what is happening with these after school tutoring. With the higher education is very expensive, and it's very difficult to get in. What I mean expensive in the sense that there are not many universities with such a large population to get in. So a lot of parents, and a lot of Chinese parents And a lot of emerging, developing countries, because they didn't have the education, they really want their children, grandchildren, have the things that they didn't have. And we joke around, and including myself, I always talk about, since I was 5 years old, I was called, I have to be a doctor. And, I did go to, medical school. And that was the whole, my parents' dream, especially my dad. And the idea is these parents is not just, the joke is you could either be a doctor or attorney or an engineer to be successful. It comes because of the needs, the opportunities that they didn't have. So they really do it out of love. It's not just because of the show off, which sometimes, of course, it comes across. But it is, I think, initially is that. So in China, that plays a huge role. So what a lot of parents did, they wanted to make sure their children get the best education, and that's what how these after-school tutoring started. The problem was they became very expensive. And I was told that sometimes even 25% of the income was going to after school tutoring. So basically, I think that's what the Chinese government started to, I think that's one of the reasons to crack down on these, saying that, it's like only wealthy were able to do this. So obviously, they're the ones who could get into the universities. And because of that, there was this crackdown. Um, and I don't see any end to that story. And that's like you can see the Edu. It used to be actually a darling, and even had a high flyer, had a nice relative strength. And this is what has happened. And it's been going down. And then when the news came, it had a big gap down. And I'm not sure if they can last. I don't know. I mean, but it is, when you look at their fundamentals, you look at there's a lot of positives. The PEG ratio is very low, and the PE to growth, the price to cash flow, no debt. But I think fundamentally, they have things have changed. And I just want to share this story with you, the case of Chen Zhu, I think. And this is a young girl that she comes from a family of two. Again, after that, we did have a one-child policy, and then for whatever reason, there were two children. There was her brother and herself, and she really wanted to get education, and she tried very hard. So she did. We do have this. I believe they have the entrance exam, which is very difficult, and she did take it. And this is 16 years ago, and she never heard anything back. And because she didn't hear anything back, she decided to basically give up, and she became a waitress, I believe. So she worked in the restaurants and other things, and she got a place to live. She grew up, and then after that, many years later, like 13, 14, she decided, you know what, I really want to get further my education. And what she did was she decided to apply for university and take her exam again, the entrance exam. And she goes and gives her name, and then surprisingly, she finds out that that they tell her that you've already have finished your education. You've already gone to the university. You finished your education, and come to find out, finally, was that when she mailed her, um, I'm sorry, when she received the results never. It was intercepted at the post office. Somebody stole it. Whatever happened, and this guy gave it to her son, or I think that's, I'm not sure about 100% about the story. But anyway, the brother or son, and they faked the ID, and they used her name to get into the university and graduated. And these are the stories, I think, it's just socially, I believe it was everywhere. And that's what it allows the government of China to have more saying about this, because people, they see again, things like this could happen. So anyway, that was just a little story. That. Okay, so let's talk about um, another history. We want to look at how the markets react the year after the elections. And basically this goes to, again, we have had, you can only go back to 2016 and 2017. So this is how the markets do. And you can see the month of August has not been very kind. And then the September, the same thing. And then toward December, it comes back up. This is how we have already done. So we are way ahead of what the average market has done. So this is just, again, average, the market finishes up maybe 8%, 7.5%, and we already up, close to 17 on this. So basically, this is about the post election. I want to look at the stock market's almanac. This is basically about August. As you can see, for August, Dow Jones return for August is the 10th out of 12. S&P is 11th, and NASDAQ is 11th, and Russell is 9th. So not a lot of fun in August, what's happening. And then the best year was in 1982, the worst was in 1974. Well, a lot happens, as I had mentioned, um, as far as things happening in August. I remember, again, this August, like 2011, I believe that was the peaks are happening. And you could see the markets for that month, they dropped 7.2%. Also, I have to tell you, this is from 2020, but the record goes, again, they're a little behind, so it goes to 2019, May of 2019. So it's not the 2019 or 2020 August are not here. So just a food for thought. Again, be careful with August. Now, Liz Ann Sanders from Schwab, she had an interesting, and she's done this before, but I thought I'll share this with you again from the fundamental side of things. And people talk about price earnings, and I mentioned on our Wednesday's class, you want to look at the quality of earnings and rather than the accounting sides, which is a lot of times the earnings, there's a lot of accounting gimmicks. So that's why you want to look at the quality, and a lot of times you look at the top line, and one of the biggest things is the revenues and sales. So it's a little difficult to, still possible to manipulate the sales side of things while you can do a lot of things with the taxes and accounting rules. So the price to sales is one of the criteria we use to see the value of the markets. And now, as you can see, as of last week, July 26th, is the PS, price to sales ratio of S&P 500 is at 295, which is higher than the internet bubble times. So basically, you can see from valuation point of view, we are up there. Although in March we had a big drop, and then this is a parabolic movement. Now, the argument will be both ways. So one of the things it will be said, okay, granted, yes, this is high, but during the internet bubble, we had a lot of companies who had nothing. They just showed up, put a .com in front of them, and they went public. So there was not a lot of really, there's a reason that was high up there, and there's a reason the markets dropped. Here we have real earnings. A lot of companies are legit, although I go back to what I mentioned about all these low interest rates. You have quite a few of the zombie companies. So that's one thing. And talking about interest rates, the other argument is, here, the Fed started increasing the rates, and the rates were much more than where they are now. So basically, we have a much lower interest rate. So there is a good reason, because the markets are the place to be. That's I'm talking about mostly stock market. So those are the arguments. So basically, I leave it up to you. This is what the history tells us. Usually you like to be on the extremes, make the decisions. We're getting pretty high up there. But again, everything is relative, right? So the interest rates being low, I guess, and the Fed is not gonna stop doing, and Janet Yellen as a Treasury Secretary. So there's a lot of dovishness, a lot of help there. So maybe this is the only game in town, so we could go higher. But generally, when we are on the extremes, either the opportunities come or there are some opportunities to lighten up. So just at least for August, I will, and September, I will be a little watchful. Next thing I want to share with you, this is, it's called marine traffic. This is, I would say this is within an hour and a half ago, 2 hours ago. And this is tells you the marine traffic, every ship around the world, what is happening. So to see what is the activities, we have the dry bulk. I know there's electricity, you can use from space watch where the lights are, there's you can see North Korea, so usually stuck pretty dark. So I want to see what is happening. And again, this within a couple of hours, it's all kinds of the shipping in our waterways. And we can also see shipping inlands. Those are through the rivers. So what the red means, those are the tankers. So you can see how many tankers are moving around the world and intercontinentally. And the green is the dry bulk, or it's like more of a, again, the goods. And you can see again that the traffic with that. And then you will see some oranges, and these are the fishing. People don't realize how much fishing plays a role in the economy, and it's in the shipping world and the marine world. So you can see quite a bit of fishing going around. So I thought to share that with you. Sometimes you can, if you have a chance once a week or so, you can go ahead and check it out and see, what's going on around the world and how much of a movement is happening and where is the biggest, you know, again, the movement, what is happening with the tankers and all that. I just, something new. Next thing I want to show, there's two lessons on this, on lumber, because we've talked about lumber since last April. I mean, I'm talking about 2020. One lesson is visually. I mean, I can see this head and shoulder is very visible, and you could just measure from the top of the head to the base, and then you can deduct that, and this would have been right around 800, 750 would have been your target. The second thing I talk about is the sentiment. I don't know if you ever noticed or not, right around here from April to May, if you turn any program on from Bloomberg to watching any other news, everybody's talking about, oh, lumber this, lumber that, Canadian companies, we don't have enough supplies. And usually when the whole market is talking about it and the news, usually that's the top. And this was no exception. And you can see again, just go back and look at some of the headlines and you will see. So, I mean, we've gone from over 1750, we went all the way to almost 500. I mean, this is a huge drop. Of course, this is one of the reasons that Chairman Powell, he says, look, this inflation is transitory. Look at what happened. Of course, the housing prices on the telling us a different story, but this is telling us, according to him, that's why he's not too concerned. Another thing I wanted to check with you is, share with you is seasonality. And this is on natural gas, and this is from a service called Seasonex. One of the things about seasonality, we talked about individual stocks because of their earnings, but there's, as far as the financials from bonds or stock markets, seasonality doesn't play a huge role because right now we are really in the hands of central banks around the world. So meaning here is a bit the Fed, right? So, but in commodity, seasonality does play a role. We talk about food, the eggs, the grains, let's say. We talk about corn and soybean and wheat, all about from the harvesting going from the planting. And now with July and August, what happens is we have the weather pattern. One of the things is, again, my worst ever, I've shared it with you, trade was in corn and soybean, and it was in August. And basically, you're really enslaved to the weather, and you really have to be um, very familiar with the climate patterns and the weather, and basically you have to spend most of your time on that. So basically that becomes very volatile. Let's say if you watch the chart of corn. The same thing actually, on the other hand, like this happens, this is for natural gas, and you can see this is for the 5 years. Now, if you're trading, it's good to know the seasonalities, and I think I mentioned it a while back. We were analyzing commodities, and you can see July is usually positive, August, and again, it's because of the heat and what is happening, and some people talk about climate change and all that. Basically, you can see August is pretty attractive. So it might be a good idea if you look at the natural gas, look at some retracement to see if as a support, maybe get your feet wet. I mean, that's just the idea. I just want to share the seasonality chart with you again. In 10 years, it looks a little different, but we are getting to the strong point and because of the heat, so use of natural gas. Another thing about natural gas is, and we can apply to other things, is the volatility intraday. We talk about ATRs, but intraday, for instance, what happens on Sunday evening, you can see the movement is 0.25 to 0.35, right? But when you go to Monday and then you see on Tuesday and Wednesday, we have a big spread. So the natural gas on, let's say, on Tuesdays, it moves between 8.5 to 14.5 cents. So that's a big move. So if you want to do trading, especially if you want to do futures trading, be aware of that there are big moves coming on Tuesdays and Wednesdays. Now, Thursdays around 7:30, you have the natural gas inventory numbers coming up. When I say 7:30, this is Pacific Coast time, so 10:30 East Coast time. So, but then the day before is a lot of movements happen, and this is really the mean. What is an average happens as far as the movements go. So this is a food for thought. There's a services for this. It's like something called Chartviber. It's a paid service you can find, but you can also set up yourself. Look at the the movements, look at the charts. So it's another lesson. The next one, right, last week of the ETF week, I showed you the Joe, which was a coffee ETF, and I showed you that we were right here. Still, we were talking about the gap. We would have done gap play, we did not have confirmation. What happened on Monday, we had a big gap up. Again, you can see 1, 2, 3 big gaps, and this looked like an exhaustion gap. So this is more of a lesson of talking about exhaustion gap. There are different gaps. We have continuation gaps. We have a breakaway gap. This was looks like exhaustion gap. And what happened? This is my linear regression channels, and you can see this is a 2 standard deviation, and this is my 100-day, by the way. This is my 100. You can see we hit that 100-day and we got rejected. So there was a couple of lessons in this that, it's really good to watch these the regression channels, and they show you that, whether we are overextended or it's a attractive time, place to get in, and basically when to get out. So anyway, I hope they were helpful, just short little lessons. Now, as far as the trade of the week, there's one thing again I want to take a look at, these gaps and what happens. One of the things I noticed, you could see, for instance, on Thursday, we did not fill the gap. On Friday, we filled both gaps. So something like this, you see this, especially on a daily, this is on a 5 minutes. When you have 2 gaps outside, this came close. Usually if it was, didn't get close. These are called islands, and they're not positive. So when you have an island, usually means exhaustion. So it's, again, this is on 5 minutes. It works much better on a daily basis, and what happens is, again, you have 2 gaps at the end, and that tells us, and usually it's the high of the chart, but this was interesting to see similar to this. Again, you can see even on Tuesday, we not filled that gap till Thursday. So on Thursday, we closed Tuesday's gap. On Friday, we closed Thursday's gap. So that was kind of an interesting, um, interesting chart. Okay, I just spoke about China, talked about the education. So that one I will kind of stay away for now till we get some help. Um, 2 weeks ago, we talked about China. I think China is an important subject we want to talk about. Um, there are both sides of, you know, some people will take advantage of the timing maybe. Some people are still cautious to get in. So I'm just going to open the opportunity, just show you some ideas and some of the ways to maybe get involved. And one of the ways I thought to share with you on the ETF is the China Internet ETF, which is called the Crane Shares China. And this is more of a, you can see me on the channel down. And basically, so just a couple of things. We look at the technical side of things, see if it's worth getting involved. You can see the volume is over 11 million, very liquid. We have options on this, it's shortable, and it is down 34% year to date. So what is this K-Web again? It is something that um, um, the, the, the overseas listed Chinese shares of internet sector. And it's only really one competition, which is the CQQQ. Both of them are, but this is a big one, and that's it's a technology, China technology. So as you can see, the largest holdings are Alibaba, Tencent, JD.com, and Pinduoduo. So they take PDO and JD and you know, Baba and all those big names. So it holds a lot of these. Doesn't hold much in, let's say, education or side of things. It's very much purely in technology and internet. Um, so uh, if I compare it, you can see it's a $4.75 billion fund. And then the CQQQ is still pretty large. So has 106 holdings compared to 52. And it's just a food for thought. If you like to pursue that, looking for opportunities, if you're a long-term investor, maybe take a look at that. It has come down quite a bit. I mean, when you go back and look at what has happened, you know, for just the past half years, down 42%. So it's, you know, we're from $105, we went close to 45. So it's just a idea. My second ETF, it was more of a technical side. iClean was very darling. It had done very well last year. It was a very good, again, it was more of a clean energy play, election play. And what has happened, all the alternative energy with the solar and with the battery, electric cars and all that has had some corrections, down 20%. But I'm looking at this and I see there's a wedge building here. So I thought this is, again, pretty liquid stock. I mean, ETF, 3.2 million. Average volume is 4.7 million. We are really narrowing, and I see that you see a lot of narrow candles, dojis, and basically I would look for breakout, although we are, let's say, under 200-day moving average, but we are very close. You can see 50-day and 20-day. We are very much close to breaking above those trend line. There's options on this. I thought just a food for thought, more of, again, from technical, but also maybe a value play. I mean, we are back where we were exactly in November. So um, just give you some ideas. You know, it's electric utilities, renewable energy, and some of the big holdings. So just a food for thought. Following up on that, when I looked at that, I said, well, if I'm positive about I mean, I'm waiting for the breakout. And I think if there's a positive things, why can't we find maybe strong holding on iClean? And one of the stocks that part of the iClean, I'll just go back, you can see Enphase is listed in the United States, 6.63%. And basically, it is a good portion of iClean. So I thought that would be a good one to go. Now, this is another maybe lesson. So when you are, you look at these holdings, I go back here. If you click on any of these stocks, what happens, it allows you to know how many ETFs and what percentage of ETFs hold this stock. So this is more of an institutional holding. And what is the largest holding? So in this case, Enphase Energy is, you can see that it is owned, the largest owner is TAN, and it has 18.1 million shares of Enphase. Also, you can see there's 177 ETFs holding it. Now, we used to have this on Yahoo Finance. You could do it also like with mutual funds. I used to do that when mutual funds are very, a big part of our investment portfolios many, many years ago. And I used to wanted to know who are these big owners, and the stock is, is it owned by a good mutual fund or strong mutual funds or just average? And this is in a similar way. So just a food for thought if you'd like to do a little more digging as far as what's with your stock. You want to see what ETF's holding it. This is just a little more in depth, with the most exposure, the number of shares, so percentage wise, the performance of all these, basically that tells you a little more ideas about, like especially the strategies, what strategies on the stock. So here it is. If you recall, you remember that we looked at iClean and you could see and then you look at this, it just had a earnings. It is nicely, again, this is from the, looks strong and ready to break out. So we want to maybe study this more. It has had again, had an earnings. So if you want to do a little more studying, this is from the squeeze point of view, from the waves, and let's see, from the scalper, they just had their earnings. So it's above its 20-day moving average. From expectations, you can see they just had their earnings, and then went from lower edge to the upper edge. So that, again, from options point of view, something you look at. Although it was not a lot of, as far as sizzle index, there was not a huge amount, but there's a good amount of, there's a good amount of open interest and phase if you like. But as a stock, if you want to even add to your portfolio, one thing is, again, I'm looking at the 30 and 100-day linear regression. It looks like from 100-day, we still have more room to go. So we want to watch the 30-day, there's a little bit more. So basically, we want to watch that play accordingly. It was just an idea, again, based on the clean energy. I want to introduce you to something that I've used past, maybe I've shared it you once before, but something a little different as far as the moving averages goes. This is based on actually 34, which is a Fibonacci number, which is between 20 and 50 if you wanted to use 21 and 55. So it's kind of a happy intermediate medium. So this blue line is my 34 exponential moving average. The red line is, I'm looking at the 34. So this is the closing. This is the low of the day. So I'm averaging the low of the day for past 34 days. And the green will be the high of the past 34 days. So I'm kind of created a band. So the way I look at it, and also you can see my trend, the candles as well, when I break below the moving average is a warning sign. When I go below the close of the low of averages, then that tells me there's strength on the on the downside. So something like this, it was telling me maybe I should be looking at more of a down, if I'm going to play options, more of a bearish outlook. And when we start flattening, that's when it gives me an idea of, well, this is a time to study this, see if there's something's going to happen. It's almost like the squeeze, right? So basically when it breaks, the candles change colors, and when it breaks above the high band, which is the close of the 34, you can use this at what, 20, 50, and you can actually program this. And then you can be going, again, you can be bullish. And the same thing happened. Usually your support will be the lower band. So you can see we touched this lower band and we got rejected, or in a good way, and now we are moving up. So that was just another thing for end phase, so I thought to share with you. All right, and I have 5 more minutes. Let me talk about the scan of the week. This time, what I decided to want to look at the S&P 500, but also I want to look at the stocks that they have price to sales ratio under 1. So the revenue is up and attractive. So these are the stocks. So basically, I let you, pick and choose, and there's 6, 9, 12, 13 of them. The last but not least are anticipated earnings. There's some still good ones coming up. There are highest volatility earning. So some of them, big one is Alibaba, the Square, the Moderna, the Roku. We got DraftKings, General, the GM, and the Uber. So just some ideas for you. And with that in mind, I really appreciate your patience. 82 slides. I hope it wasn't too much, but I hope it was helpful. Thank you, and we can open up for Q&A. Thank you very much.